In this video, I'm going to teach you how to prepare the investing activities part as well as the financing activities part. So for the investing activities part, you need to look at your non-current assets. Okay, so basically what am I going to do now is I'm going to write the statements part for investing activities. So we will always start with cash flow from investing activities. So we are going to see whether we have bought any new non-current assets or whether we have sold any non-current assets. So very simple, we are going to look at the questions, and in this question under additional information, they didn't tell you whether they have sold any non-current assets. So during this year they didn't sold any non-current assets. Okay, so there won't be any proceeds from the sale of any non-current assets. Okay, but you need to look at the non-current assets part to see whether you have bought in new non-current assets or not. Okay, now cash holdings, number one, this is actually a current asset which is under cash and cash equivalent. So this is not a non-current asset, so we don't look at this first. Okay, now investments, which is shares in companies, are non-current assets. Okay, so this is non-current assets, and if you look at your investments, it didn't change at all. So from 8,000 become 8,000. That means I didn't buy any new investments. Okay, so there's no cash outflow and there's no cash inflow, so I don't need to record this. Okay, don't need to record this. Now if you look into your land, okay, your land is a non-current asset for sure. But if you look into your land has increased from 166,000 into, okay, your land has increased from 166,000 to 169,000. So there is an increase of 3,000 over here. But if you look into your additional information, okay, your land has increased because there is a land revaluation. Okay, your land has revalued by 3,000. So the increase of 3,000 here is because of your gain on land revaluation. So gain on land revaluation, there's no cash inflow or cash outflow, so we don't need to record this as well. Okay, we did not buy new land. Okay, this increase of 3,000 is because of land revaluation, and whenever we have a land revaluation, there's no money coming in or out. Okay, next one will be motor vehicles. If you look at your motor vehicles has increased from 17,100 to 48,500. This is because you have bought in new motor vehicle. Okay, so you need to record this in your investing activities. So you have buy new motor vehicles, so you will have payments for motor vehicle. Okay, payments for motor vehicle, which is, okay, your motor vehicle from 17,000 become 48,500, which means that you have buy in 48,500 minus 17,100 worth of motor vehicles. You have to find the differences to find out, in order to find out how much motor vehicles you have buying, okay, how much motor vehicles you have bought, you need to find out the differences between the opening balance and the closing balance. Okay, so you have bought 48,500 minus 17,100 worth of motor vehicle, so you have bought 31,400 motor vehicle. So if I pay for my motor vehicles, this will be a cash outflow, hence you need to put a bracket over here. Okay, so there's a cash outflow of 31,400. Okay, so for your accumulated depreciation, the differences between your accumulated depreciation will be the same as your depreciation that you get over here. Okay, so if you look at the differences, it will be 2170 as well. And for depreciation, there's no cash inflow or outflow, so you don't need to record. So the only thing you need to record is the payments for motor vehicle when it comes to non-current assets. Okay, when it comes to investing activities, you only need to record the payments for motor vehicles in this question. So there's only one item. Okay, so 31,400 will be your net cash flow from investing activities. Okay, so we are finished with our investing activities. The next thing that we need to do is financing activities. So the first thing you need to write is cash flow from financing activities. Okay, cash flow from financing activities. So financing activities, you need to look into your non-current liability as well as your equity part. Okay, so the first non-current liability that we are going to look at is your loan from bank. So loan from bank is a non-current liability. If you look at your loan from bank, your loan from bank has reduced from 2,000 to 0. At the beginning of the year, I owe people $2,000. At the end of the year, I owe people nothing, which means that I have repaid my loan from bank. I don't owe people anymore at the end of the year. Okay, which means that at the end of the year, I have repaid back all my loan. So there will be a repayment of bank loan, okay, which is 2,000 minus 0. Okay, the differences between the opening and closing balance. So I have repaid 2,000 of my loan. Okay, since I have repaid my loan, there will be a cash outflow. So cash outflow, you need to bracket it. Okay. So the next one that we are going to look at is share capital. As mentioned in your additional information, there is a share issue during that year. There's a share issue during that year, and the share issue cost is 1,008. Okay, so under the statement, you will have share capital because you have issued some shares, and you would have share issue costs. Okay? You would have share issue costs. Your share issue cost is 1,008. Okay, share issue cost is 1,008. So your share issue cost, there will be an outflow. There will be an outflow of 1,008. And for your share capital, you need to find the differences in your share capital, and then you have to add your share issue costs. Okay, so how to find the differences in your share capital? How to find your differences in your share capital? You take the opening balance. You take the closing balance minus the opening balance for share capital. So if you look at your share capital has increased by a lot. Take the closing balance minus the opening balance. Closing balance minus opening balance. So 197,300. 197,300 minus your opening balance, which is 169,640. So which is 169,640. And then you have to add your share issue cost. So your share issue cost equals to 1,008, because I need to find out how much of money I have issued initially. Okay, so I have to add back the share issue cost first. Okay, so 197,300 minus 169,640 plus 1,008, you will get 29,460. So this 29,460 is the amount of money that I have raised from your share issuance. Okay, so once you are done with your share capital, we look into asset revaluation reserve. as I mentioned just now, asset revaluation reserve, for asset revaluation, there's no cash inflow or outflow. So I don't need to record this. Okay. So the next one will be general reserve. If you notice that your general reserve has increased by 2,000. Okay. Your general reserve has increased by 2,000. So if general reserve increased by 2,000, your retained earnings will reduce by 2,000. So later on, when we prepare our retained earnings account, we need to record this part. Okay. And the last one, you need to look at retained earnings. Retained earnings, we need to reconstruct your retained earnings account to find out how much is your dividends that you declared this year. Okay. So you need to open a working for retained earnings. Okay, you have to open a workings for retained earnings. Put in your opening balance, put in your closing balance. Opening balance is 2004. Oops, sorry. Opening balance 2004. And closing balance will be 3810. Okay. Opening balance 2004, closing balance 3810. And just now, we have transferred some money from general reserve to retained earnings. Okay. Just now we have transferred some money from retained earnings to general reserve, not general reserve to retained earnings. Just now we have transferred some money from retained earnings to general reserve. So our retained earnings goes down by 2,000. So under your workings, you must record that your retained earnings have reduced by 2,000 because you have transferred this into your general reserve. Okay. And not to forget, you have to include your profit after tax. You have to include your profit after tax. Oops, sorry. You have to include your profit after tax, which is 13,050. Profit after tax 13,050 into your retained earnings. Profit after tax will increase your retained earnings 13050. Okay. And then I think that's all. Okay. So you need to find out how much of dividends you have declared during that year. Okay. So 13050 plus 2400, you get 15450. So 15450 minus 2000 minus 3810, you will get 9640. This 9640 is the amount of dividends you have declared this year. Okay. Now, since there is no dividends payable, which means that all these dividends that you have declared this year, okay, all these dividends 9640 is declared and paid for this year. Okay, all this dividend is declared and is already been paid. So your dividends paid is under financing activities. Dividends paid equals to 9640. So it's equivalent to 9640. Okay. Now the last thing that you would do is you need to add up everything, and you need to make sure that you have used all the information in your account, in your question. Okay, once you are done, you can sum up everything to find out your net cash flow from financing activities. Okay, and this figure will be negative 2000 plus 29460 minus 1800 minus 9640. You will get 16020. And your net increase or decrease in cash held. You need to find this out. Okay, you need to find whether there is a net increase or decrease in cash held. So how are you going to do that? You are going to add up all the subtotal for each activities. For example, your net cash flow from operating activities, your net cash flow from investing activities, and your net cash flow from financing activities. So you are going to take these three figures. You are going to take 15410. You are going to take 31400, and you are going to take 16020. So you have to add these three up. So A plus B plus C equals to 15410 minus 31400. I need to minus 31400 because in investing activities is a negative figure. Okay, so minus 31400 plus 16020, you would get $30. Okay, so if you look at your, so there's a net increase in cash held of $30. So you can strike this off. You can strike out the word decrease. Okay, so your net increase in cash out is $30. Okay, so the next thing you need to record is your cash and cash equivalent at the start of the year. Okay, which is your cash holdings over here, 4,300. Oops, sorry. 4,300, and your cash and cash equivalent, okay, at the end of the year will equals to 4330. Okay, 4330. So how to check whether your statement is correct or not? You look at the differences between your start and your end. So you take 4330 minus 4,300, you will get 30. Okay, and this figure over here, the differences between your opening and closing balance for your cash and cash equivalent has to be the same as your net increase in cash out, which is 30. So since we got the same figure, which means we have done it correctly. Okay, so this is how you prepare your SOCF for question 21. Okay, so if you have any question that you want to ask, okay, please come and see me during consultation or send me an email. Okay.